The pain trade for most people has been what's happened in treasuries, the dollar. The equity trade has been a little bit painful for you, given that we've shot through your year-end target and kind of stayed there. Where do we go next, and what are your thoughts?
Well, I think you have to disaggregate a few things. Right now, the dollar rally that we've seen, along with the sell-off in treasuries, you could call it short covering, on the dollar and just simply over-position longs, with respect to treasuries. And right now, you do have some good economic growth in the U.S. and, of course, around the world as well. I think right now the question is how much further are we going to go in this dollar move, and how much further we're going to go in treasuries. I'm going to guess that as the tax discussion gets unfolded in the coming days and weeks, you're going to start seeing some pretty aggressive selling of this rally in the dollar there, and with that, that's going to be ricocheted through to treasuries. Equities, I think, is a different asset class right now, and I think it can continue to perform to the upside.
When you look in that equities asset class, where are your favorite places to position? Because the dollar and the treasury yield have obviously created a lot of rotation.
Yes.
If you're counting on those turning back over, are you leaning on growth again?
It's funny. When you look at the NDX chart, it looks tired, right? When you look at the heroics that the tech sector put in the first half of the year, you're sort of like, how much can we expect out of the FANG and the other large cap tech names to really lead that way? On the other hand, if you are aggressively buying the U.S. and you think tech is tired, then you're kind of buying the Trump reflation trade, right? Which means you're going to be buying banks and you're going to be buying small caps. So I do think equities are going to be. U.S. equities will be probably in a stronger position. I do think I'm going to, a 2350 year-end price target is too low, quite frankly. You just look at the charts, it kind of tells you that it's going higher. But I think right now, I think you have to be very, very careful with respect to sectors. And I'm going to guess that as we get into Q4, once tech catches its breath, and if this reflation, this Trump 2.0 reflation trade fades, I think tech will at that point be able to lead all the boats higher.